All right, cool. I believe we are live. Now let me make sure here on Discord that I am sharing a screen. Screen. All right, perfect. All right, welcome everybody. Today is November 24th, 2025. This is the Bookmap stream. So each week we hop on with Bookmap and we talk markets. So for those that don't know, my name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. If you enjoy any of the streams or you're looking to get in contact with us, these are all viable options. And then we are actively posting now on Twitter. So highly recommend to check out at DARMA Cap Trading. And then I'm active as well on LinkedIn or here in the Bookmap Discord. So all areas are great to reach out. And then if you guys have any questions, I will do my best to get back to them as soon as I can. So let's run through some disclosures, then we'll go into house cleaning, and then we will get into the meat of it. So disclosures are all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So each week we always start by talking about risk capital, and what we see as trading capital is risk capital. And what does that mean? That means capital in which you're willing to lose. Keep it really simple. The reason for that is if you need that capital for bills at the end of the month, groceries at the end of the week, or let's say just to improve your quality of life, right? Go to a concert, go to a movie, go to dinner, all those kind of things. You're not thinking about a trade when you are in the trade, right? And so we try to make it incredibly easy by just saying trade with risk capital. The reason for that is each week we also focus on the facts. So what is the market presenting to us, external or biases? And because we know, as well as many other traders, that we all come in with biases on the market every single day. And whether that's a Twitter thread that you read that you thought was incredibly well written, whether that's a Twitter thread that you read that's incredibly well or not well written, news articles, whatever you see in your day-to-day, that all has an impact on how you perceive the market and how you make decisions. And so what we like to do is just focus on the facts, right? The market structure, what's happening here and now, and then you'll see that today in our how we break down markets. So let's do a bit of house cleaning. For those that are active in the Bookmap Discord, or those that are not, they are going to be hosting a Pro Trader webinar. So there's a whole list of traders that they're bringing on. Starts on November 28th, and then and it goes through December 5th. So get in the Discord, check it out. I believe it's in the events channel. But if not, and you can't find it, you're more than welcome to reach out here in our channel as well, and we'll point you in the right direction. Next is a bit of a teaser. So for those that actively enjoy Bookmap and are looking for some discounts or some deals, Black Friday sales are coming. And so I don't have the specific numbers for everybody, but there will be a public announcement here soon. All right, so let's dive into kind of how we break down everything in terms of markets all the way to our streams. So for those that are new, and I think I see a new face here, we break down markets from a top-down view, right? And so we're looking at the macro landscape first. So what's kind of happening in the global markets that potentially is impacting particular markets. And then we dive in a little bit to the smaller durations, right? And so because we hop on each week, we typically go over seven-day durations in Bitcoin and Ethereum predominantly. We've also added the ES futures, and we talk about the weekly structure. And then once we go through that, then we take it a bit further. We look at Bookmap, and then we're really getting into the micro level of liquidity, where those active buyers and sellers resting in that book. And so within all of that, the further that we see confluence, the better we get signal acceptance, and the more that we feel the confidence within kind of the outlook. So macro landscape, the largest one today is a note from the U.S. administration about potential meetings with President Xi later on in 2026. But beyond that, we also have some holidays. So we are heading into the holiday season. Seasonality typically is positive. However, we haven't seen that, and actually the inverse for crypto markets in particular. And November has been a brutal month for both Bitcoin and Ethereum. So for the most part, all eyes remain on the December FOMC meeting. Markets tend to be and have been a bit spooked by some of the rhetoric that's been coming out of the FOMCs. And that really can change narratives, right? And so a lot of this AI narrative that's been driving the market, I don't know if anybody's kind of looked at some of the interesting charts that are out there, but I don't have it on today's stream, but a super interesting one is job listings, job openings relative to the S&P 500 returns, and then relative to the inception of ChatGPT. And then also, obviously, for those that are familiar but aren't familiar, massive CapEx spending within AI, and just a massive amount of flows within AI. And so I don't have the specific number, but I believe it's somewhere around 40% of the S&P gains this year has been particularly AI. And then obviously NVIDIA is around 8% of the S&P at this particular point in time. So a lot of one-way narratives, and a lot of that spending, a lot of that ideas is on the future progression of the space, cutting down overhead expenses and increasing growth without continually having to hire labor, right? And so we'll see how it all plays out. But some interesting ones are typically bubbles don't burst until there's a reason for them to burst. They can go far beyond what anybody thinks. And so monetary policy obviously really matters. And so December rate cut, while it was priced into the market, now the fact that it's kind of shuddering is enough to change perspectives and push capital. So that's the largest one to look at 4 to 6 weeks out. And then obviously we are in the last month of the year. And then we start a new year. And so new year rebalances, new ideas come to the plate, new hedge funds, allocations, all these kind of things. So a lot of flows are going to be happening over the next 4 to 6 weeks. And you compare that in with the holidays that we're going to face, you can shorten that duration even further, right? So this week here in the U.S. is going to be Thanksgiving. It's a quieter week typically. And then you have the end of the year, which is right around Christmas time, another quieter week. And so that really shortens that period of flows, right? So large picture, that's kind of what's going on. And so most important is to continually watch the FOMC. So yeah, so sorry, I was reading Dome's comment. So the market can stay irrational longer than I can stay solvent. That's very true. And typically when people are talking about bubbles, it's already known, right? So oftentimes things don't play out when the market already knows about it. All right, so let's dive in a bit further and let's get over the weekly agendas. But before we do that, we always go over the website. So we just released our website this year, DARMAcapital.trade. If you haven't checked it out, make sure to go over and check it out. Within here, you can see everything from what we're about to Advisory Analytics Academy, right? And so 3 verticals in which we operate in. And today we're going to, and each week we're going to talk about the kind of the data analytics. But before I say that, everybody likes free stuff. So we have, I point everybody here at the beginning of this show to our free trader assessment and education. So all of our education on the site at this particular point in time is free. Anything that we talk about today, if you want to learn more about it, just go over to the free trader assessment and education. Fill out some of the quick questions there. I believe it's an email. and it helps us understand a bit more of who you are as a trader. And then you get access to the Academy and the Trader Assessment. So Academy has tons of different lessons, all of which have quizzes, right? And they are broken down in terms of everything in which we talk about, right? And there's a lot more depth there that we can't cover in an hour show. So feel free to go check that out. It is free. And then the other piece that I like to talk about is the Trader Assessment. So that's personality profile. It's a great test for one, if you're a pro trader, if you are a beginner trader, if you are just entering trading. Part of the reason is it tells you about who you are as a person, and then it correlates it to trading, right? And so, for instance, great example for me is I tend to do better when environments around me have a bit more color, right? And it seems incredibly small, it seems nuanced, but I built out an office here in my home, and it's given me a positive place to work, and so I feel inspired through that, and typically it makes me want to be here, and through that process has made trading a bit more enjoyable. But beyond that, it also tells you a little bit more about who you are, right? So for instance, curiosity, if you are a systems-based trader, kind of lean more towards a hybrid approach where it's systems assisted, or you are fully discretionary, right? So a lot of cool insights there that all traders really should go through at some point in time. All right, let's dive into it. So on the agenda this week, we're going to go through Bitcoin, Ethereum, and then we have also started to include the S&P futures, so the ES. If we should typically have time for about 4. So if you guys are watching the recording or watching the show now, and you want to drop one in, by all means, we can add it to our weekly list, and or we can kind of leave it open. So let's dive into Bitcoin first and go through how we break down markets. So what you are going to be looking at once this loads is on the left, we have the price map. On the right, we have the playbook, right? And the playbook breaks down the price map. And within the playbook, the whole point of the playbook is to make markets digestible. So each time you come sit at the desk, you understand market state, right? What's the expectation of a market in this condition? Market structure, right? So based on the market structure, based on the sentiment, how do you combine the two? And then once you combine the two, what's the strategy, right? And then it gives you kind of outlooks. It makes it incredibly simple so that you can focus on the facts, right? And so currently, and we've been in this state for a bit, but Bitcoin's perpetual market's in a bear trend. So a bear trend is a signature state. It's typified by a market that continues to make lower move lows and lower move highs, or negative structure. If the market continues to hold structure, further losses should be expected. This does not mean there cannot be corrective pullbacks, but rather any positive price action is expected to exhaust below the high inflection point that will maintain structure. Any violation of this resistance point or break in the negative structure is more likely to produce a neutral shift rather than a positive transition. If the market has been trading on the offer all session but has not been able to follow through on negative breakout, beware of a corrective squeeze into the close. Typically, a strong price move at the end of the day, end of the settlement phase, will be followed by weakness in the new trade period. If the market is going to trend lower, it will demonstrate that with negative intraday price structure. If not, a weak digestive trade is the outlook, right? So, in terms of the state, basically we are still in a bear trend. Same thing as a downtrend, right? And if it can't break lower, watch out for the squeeze into the close. Structure, right? Structure is negative. So the UP, the R is between the UP and the UT1, right? So positioned right here at the CRX plus. And so what does that mean? Sentiment's negative. A market in a bear trend signature state with the R level above the UP creates a resistance band which defines the upper peak of the negative market structure. Trading below the R level will keep the market vulnerable to a negative trend move. This is the optimal sell zone. Rallies into the area are expected to exhaust. Size management off the lower selling opportunities should be considered to ensure enough firepower if and R level sell opportunity is presented. With the R level above the market, a typical hedge scenario is when the market breaks out to the downside below the DP pivot early in the session and then has a low volatility rally all day, closing at or near the R level. Recognizing this momentum shift early can produce a nice counter trend opportunity. Okay, and then strategy for the day: sell R fades, sell UP reversals. So the fact that that we basically chopped around, couldn't break lower, what did we get? We wound up getting the rally towards the end of the day, right? And it actually held the CR minus. So I'll read through this and then we'll kind of talk about it. So technically the market's in a bear trend with selling energy focused at the UPR level price band. Keep a sell strength outlook below here. Use a sell R fade and a sell UP reversal strategy in conjunction to capture an optimal opportunity, which is to sell the peak of the next reaction lower. A breach of the R level negates this opportunity. Don't get caught leveraging up on a buy R breakout, as it is more likely that the move is just a squeeze and not a transition into a positive market state. Typically, market will range trade with the CR plus or directional being the new digestive low. A sell directional breakout can be used to add any short position. Use proper size management and avoid over leveraging. The market should begin trending lower below the directional and stair step down to the price map framework. A sell DP breakout is valid, but only the minimum amount of leverage applied. Anticipate positive reactions off support levels, but maintain a negative outlook as long as the market is holding negative structure. A break in structure and a corrective trade back up to the R level range should be anticipated. Use the buy DP reversal and a buy directional breakout to capture a corrective turn. The note down here is pretty interesting. Technically, the market is in a negative trend. Sentiment supporting the state condition and the likelihood of the market trading lower high. In this state and structure, it is easy to get over leveraged early below the directional, only to be squeezed later in the session for a test of the UPR level. Be prepared for a test of the UPR level at some point in the session and incorporate proper size management. So today it nailed it. And I'll break it down for you. So basically, optimal was out the door. The reason for that, we didn't get an opportunity to sell a UP reversal. What is a UP reversal? A price that breaks up over the UP positive alert distance, which is this upper dashed red line here, and then breaks under it. We didn't get that, right? What did we get? We got a directional breakout that kind of chopped around and failed, and this was a tough trade, right? However, it did turn into a directional breakout to the downside that failed to follow through and teed up for a bi-directional breakout towards the end of the session, right? So where does that target? Immediately that targets the R level. And so we didn't get there, but we got pretty close. And so typically what you see in bear trends, just to kind of give a bit of context, and each of which are different depending on the R level. And so that matters. But with the R level at the CRX Plus, which is stationed right between the UT1 and the UP, you do have a lot of energy up here. And so if a market in a bear trend isn't going lower, it is at a risk of squeezing. And when does that typically happen? You can see it into the close, right? And so that's exactly what we got. And so this directional breakout, which is price breaking above the previous day's close here, but more importantly over this yellow dash line, where does it target? The R level, and you get that short squeeze into the close, which, if the market is going to stay to the offer, likely is all the market has to give, right? And so how would you trade that, knowing that we're kind of in the latter half of the day here? We have 2 hours left on the daily crypto close. A market under the directional for the next day, depending on where the R level tees up for kind of that execution, saying that was pretty much all the market has. So that's what we're going to be looking for over the next 3 hours. Once we get the new playbook, is where's the R level going to be stationed, and then what's the playbook commentary going to say. But here for Bitcoin, Where are we seeing some of that resting liquidity? Sorry, that was on the daily. Let me also pull up the weekly because we always talk about the weekly too. Cool. So that was the daily. Let's actually go over the weekly just as well too, just to show kind of the differences, because I know Steven, you had that question, and I'd like to show kind of why that's important. So states the exact same, bear trend, structure is different, right? So it's a negative sentiment, but the R level is above the UT1. So signature state with the R level above the UT1 is vulnerable to a negative momentum up to the R level. This is the optimal sell zone for the weekly. This rallies up to this inflection point are expected to exhaust. Size management at lower selling opportunities should be considered to ensure enough firepower up to the R level, right? And so with the R level above the market, a worst case scenario is when the market breaks out to the downside early in the session and then has a low volatility rally all day, closing at or near the R level, recognizing this momentum shift. So very similar. However, on the weekly, we're seeing a lot different, right? So on the daily, just to toggle it back over, we got that squeeze towards the end of the day. But here on the weekly, we've also produced a different signal as well. And so how do you add these together was Steven's question, and what are we going to be looking for going forward? So based on the daily, there's a couple things that we're looking at. One is we got the perfect setup for the trap on the shorts into the close, right? That's great. Based on the daily commentary within the playbook, this has the potential to be the high for a new ebb lower, right? What are things that we're going to look at? Typically, when you're using the weekly to execute and you also have the daily, dailies become triggers, right? And weeklies become your broader outlook, right? Similarly with monthlies, right? We also support monthlies, we also support yearlies, and we also support quarterlies. And so you can pair the durations, and that's what we typically do to get a broader picture. And what you'll see is when you start overlaying all of the different price maps, you see alignment, right? And so if you get a buy DP reversal on the daily, immediately that becomes a trigger back to the directional on the daily. And if you also see it in alignment with the weekly, that becomes furthermore important, right? Because now you have two durations that are matching that trigger and that signal. And typically with reversals, you know they're strong, and they should be strong because they're traps, right? And so what we typically do is we start pairing multiple different durations. So daily, weekly, monthly, quarterly, yearly. Everybody has to rebalance their book differently. And so you'll see a lot of the hedge funds, a lot of the larger institutional money rolling their positions on a 30-day basis and on a 90-day basis in alignment with the quarterly. And then on the daily, there's absolutely tons of signals that actually matter, right? Like today's daily signal. However, if you take a step back, where are we at in the weekly? Currently, we're still over the previous week's mid. And the strategy that's in play is a hedge theme, right? So a bi-directional breakout. So if you go down to the commentary where we're currently at, which is a bi-directional breakout, the key, and let's kind of highlight all of this, the key to a persistence of the bear trend is the market holding a negative structure, which we're currently not at the moment. A break in structure and a corrective trade back up to the R level should be anticipated. Use the buy DP reversal and the bi-directional breakout to capture a corrective turn, right? How do you get a lead on it, right? Because in trading, you always want the best cost-based average. Strategy on the daily. It's very, very similar. R level's in a different state or in a different place, so that matters. But playbook is dictating the same. Your average here on the bi-directional breakout is 86,700, right, for this late day rally. Let's say you bought it, right over the previous day's close. That's positive. That's what we talk about each week. You buy it. Your worst case scenario, 8690 or 900, right? Worst case scenario with a spread. So that's your lead, right? You start pairing that with the weekly, which is also in a bi-directional breakout, which is a hedge theme. you got your lead about 1,000 points better than the weekly, right? So what does that mean? Weekly, or that means, let's say all of a sudden today it fails here. Your break even is basically 200 points of risk right over the directional figure, right? So you take a 200 point loss, but you already have a 1,000 point lead. You can start lightening up on the previous week's mid and pairing those durations when you get some confluence within strategies gives you that lead. So that helps you with your signal acceptance. And we actually take it a bit further within our score, and it shows alignment on multiple different time frames, which is really cool. So we'll talk about that in future streams. But just to simplify things, if you can get a better lead on your trade with the idea of using the daily as a trigger, and your outlook is the 7 days, you say, well, I have a 7-day, a weekly outlook on this trade. That's always positive, right? So we'll talk about it at the end of the stream too, just to make sure I'm cleaning it up for you. But specifically here in the weekly, what you want to see is a base over the previous week's mid. That absolutely matters. When we get a new daily today, if the directional is supportive, we'll see where the R level lines up with the market. But as long as you're over the directional on the daily, that's positive, right? The moment you're under the directional on the daily, that's a negative signal. So that starts to put that weekly back in question. And if anything, more than likely, that directional is going to be over your entry, and you can lighten up, take profits on at least a fourth of it, right? So it always keeps you in a place of ebb and flow with the market and sizing in and then working that position. So that's the outlook for Bitcoin. Our level is all the way up at 104. So as long as we're holding positive structure, we're in a bi-directional breakout. Expectation is at least a retest here of the previous year's close. It's a significant yearly figure. We're heading into the end of the year. So that's going to matter. That's a significant number. Over it's positive as long as we can hold it. Our level's in play. Under it's negative, right? Where are we going to go? Turn back into kind of a digestive sloppy trade. We're still digesting this massive move lower over the last few weeks, right? On Bookmap, where's that liquidity resting? 93,000. 93,000 here at just in front of the previous year's close. So just what we were talking about, and just over it, 94.5, right? So just on the upper end of this UP. Very important level to monitor, and we see direct alignment there. On the bid side, 75,000. So CRX minus front runs the previous year's mid. As we kind of head into the year end, these midpoints and closes really do matter. So they matter a lot, typically, but specifically here on the previous year's close, that is a huge figure where everybody is going to be looking. The reason for that, Bitcoin's either positive or negative on the year. Currently, we are slightly negative, but that can all change, obviously, as we know, in a week, as it did last week. So that is Bitcoin. Let me pull up Ethereum here, and we'll dive into that as well. All right, so daily is a bit different here. We actually got the buy R breakout. So the market is supporting the R level, and it has about 2 hours to kind of progress further. Markets typically tend to go a bit more quiet after the regular session close here in the U.S., but that still holds true until we get some new data. So let's actually dive over to the weekly, because I know we need to cover some ES, and we may run out of time. So let's do the weekly. Where's the R level here? Okay, R level is above the UT1. So a bear trend, same thing as Bitcoin. So a bear trend is a signature state. It's typified by a market that continues to make lower move lows and lower move highs or negative structure, right? Same kind of playbook overlay. Structure here is negative. R is over the UT1. So the weekly playbook for Bitcoin and Ethereum are the exact same thing. So what are we looking at, right? a break-in structure. A break-in structure and a corrective trade back up to the IR level should be anticipated. Use the buy DP reversal in the buy directional breakout. So currently we're in a buy directional breakout. Exact same playbook, right, as Bitcoin. Makes sense. They're correlated. Same thing here. Previous year's mid. Over that's positive. More importantly, we have the UP here, which is 31.29. That is a level to watch, right? So typically, if we are really going to make a show against this trend, which is a bear trend, positive structure needs a hold, right? And so what you need to do is you need to see previous week's mid, hold, chop around, scale higher. Previous year's mid, hold, right? So let's say we test 31.29. Because it's the UP, maybe you get a bit of a digestion into the close tomorrow, something of that sort. Again, after the open, when the bid picks back up, it needs to keep scaling, right? This market has a lot of ground to cover in order to target the R level. It should not break structure, right? And what do I mean by break structure? It should not make a new low, and it should continually make just a stair step higher, right? If it does not, it is more likely that we are in a digestive trade, right? Versus kind of just a scaling right back to the R level. So take note of that and be very aware, because bear trends can be sloppy, right? So that's Ethereum. On the downside, if we do break the previous week's close, that's a problem. Previous week's low then becomes kind of this lower area here. Previous week's close, the previous week's low, tees up for 2,500. If not, a breakdown to 2,200 would be that lower extreme expectation for the week. Currently, we are in a hedge theme bi-directional breakout. Looks picture perfect to this point. We've held the previous week's close perfectly, scaled higher. So that's where we are now. Next 24 hours, need to hold the previous week's mid. Not a want, it is a need. And then that puts the R level in play, right? And so previous year's mid, same thing with Bitcoin. Yearly levels really matter right now. So 30.60, 33, 31, previous year's close becomes a significant figure. Previous month's low, less of importance. Previous year's close is significant. So upper extremes here, previous year's close to the R level is to watch. On Bookmap, where do we see some resting liquidity? 31.50. So 31.50 is right in this UP level, so kind of just what we talked about. Let's say that we test it. Markets enjoy to gravitate towards liquidity. We test it, we pull back. No point in that pullback should break that recent structural low. Otherwise, that's a reason, with the holiday, with everything else, to kind of lay off the leverage, lay off the gas, and wait for a new price map, right? So downside, we see 29.20, which is basically just in alignment, just under that previous week's mid, but more in alignment with that recent structural low down here. Don't really see a lot of alignment outside of just kind of price structure there, but with the price map, but an interesting level there to monitor. And then downside, we see 26.75 basically, which is a CR minus. Also interesting to note, but the expectation, if we're under the previous week's close, we really need, the validation becomes under 26.1889, which is that previous week's low, tees up 2,500. So this full band down here, previous week's close to the previous week's low, can be choppy. However, under the previous week's close by no means is positive. So that's the Ethereum outlook. And then let's take a look at the ES as well. And we will do the same thing. So let's go through the weekly here. And we finally got the rally today that everybody's kind of been looking for, and we'll see if it holds. So Neutral digestion market state is characterized by sideways trading conditions with limited profit potential. Opportunities exist on both sides of the market, but directional moves are not expected to be sustained. Avoid chasing momentum, be patient, and focus on execution at key structure points, employing effective risk management strategies that protect any unrealized gains. Transition indicators. This is always important when you're in a neutral digestive state. This state can be a precursor to a potential breakout as prolonged coiling action builds power. Look for an early session trend move with no break in the positive or negative structure as a tell. To identify a possible breakout. A simple moving average can be an effective visual tool to identify an impending shift in state. So, our levels above the market here, right? 67.75, 77 cents. Directional here. We haven't broken structure yet, right? So the market tried to break here, couldn't, and we're in a bi-directional breakout. Structure, negative. The R level's at the UP. So the R level equal to the UP gives the market a negative tone below this price point. Typically in this market structure, bias, price is searching for its lower digestive extreme. Use caution. Difficult stop-and-go trading conditions are expected for any new negative price action. A rise above the R level is expected to produce a more definitive positive shift in opinion with a good chance of producing a transition higher. The key to any transitional signal will be the market's ability to maintain both price and market structure. So, currently we are in not an optimal theme, but we are setting up for an optimal theme. So the R level is right at the UP, and so you can't really tell because the R level supersedes it. But this would typically be the UP, right above the CR plus, right under the CRX minus. A sell UP fade is the optimal setup currently. So technically, the market is in a neutral digestive position with a pivotal structure identified at the UPR level. Opportunity exists on both sides of the market, with the UPR level representing the turning point for either an optimal or hedge strategy themed session. If the market's going to continue to maintain a weak digestive posture with choppy sideways trading conditions, the integrity of the UPR level will remain intact. Use a sell UP fade strategy to capture this expectation. Market trades up here. Currently, we really haven't broke structure, so be very aware of it. Would not go all in because markets that are producing positive structure and don't break positive structure are telling you something, right? However, on the sell side of the trade this week, this is the optimal make or break area, 677577. Over it's positive, under it's negative. Where's the transition to watch? 6794, right? Is important to watch. Over it, you can get that transition back into a bull trend. However, under it, just immediately targets back to the directional, if not the DP. Why? We're in a neutral digestion market state. Typically, that's defined by the critical range. Where's the critical range? 652459, all the way up to the R level. R level is your sentiment bias on the session. So that is where all the energy we see to be stored on the market, right? And I don't know if you can fully see it here, but that's the expectation. Over it, if we can base over it, 6776, 6778, as long as we can hold that figure, that's positive, right? And where does that target? UT1, if not back UT2. So let's talk about that as well, because when and if we get to the R level, those are very important. Those are the two opportunities that exist. So a UP breakout, which is a buy R breakout. A breakout above the UPR level is a transitional signal that may or may not play out in the session. Although this market state condition supports a sideways trading environment, don't get stubborn if the market starts to get into trend mode. Use a buy UP breakout to get on the start of a potential positive state transition. Negative price structure should be viewed as an expansion of its digestive parameters with the potential of producing a one-way trade into the close and new extreme. Don't step in front of the market and fade the DP, but rather wait for an exhaustive signal and execute buy DP reversal. So that's if we're down here. We are up here currently, right? And so neutral digestive market states, precursors to trends. Currently, market price structure hasn't broken. If we base over the previous quarter's close, targets the eye level. As long as price structure doesn't break and we keep marching higher, there's no reason to fight it, right? That means the market state will be invalid, which is okay because we'll get a new market state as it transitions. And that puts the R level as the buy support level for the session. Now, if you get a market that breaks over 677577 and then quickly reverses, that's a sell UP reversal. And that is a strong reversal signal because you get all these buyers, they're looking at this recent high, they're saying, okay, we've made it all the way back, and then you get a rug pull. Where does that target? Back to the directional, right? If not the DP, and that really gets people stuck in this digestive state, right? So that is the outlook for ES. I'm gonna get some water, but let me know. We'll open it up for questions, and yeah. So if you have any questions, feel free to drop them in the Discord, and we'll keep it open for a few minutes, and I'll run through them. Yeah, so Stephen, there's a couple questions here from earlier today, and then I see you're typing as well, so we'll get into them. So earlier today, question was, let me see if I can, yeah, I can bring this over here. Let's do that. So last week on our Twitter, we published an outlook where we saw some good alignment with the daily, and then we saw it with the weekly, right? And so the weekly price map was the DP was aligned at 89,361.5, and then we saw a buy DP reversal in play off the daily. Right, and so that's kind of what we were talking about today with that end of the day move and how to kind of layer those time frames on top of each other. But what Steven's asking is the daily and the weekly time perspective, is it just for extra confirmation to add additional context? Yeah, what's the reasoning and mindset behind it? So we have price maps on all different durations: yearly, quarterly, monthly, weekly, daily, all of which have different structural alignments, right? Typically, what we see is when the market is in best alignment, all time frames are supportive, right? So you have a yearly that's at a very significant pivotal level. You have a quarterly that's also at a very significant pivotal level. Then you have a monthly that supports both in terms of sentiment, right? But then it also supports in terms of alignment as well. Weeklies and dailies become trigger signals. And when you have all alignment, confluence with all of them, that's the optimal golden egg setup that we see, right? And what we follow. Excuse me. So here's just a perfect example of how to kind of pair a weekly and a daily. You get last week's break on Friday into, or I think this might have been Wednesday, November 18th. So you get a break into the weekly DP. It's a good level, right? It's a good level to look at. Within the price map, you have the critical range. We're showing all the major levels here. So the UT1, DT1, and then you have your critical range, right? So your UP down to your DP, that defines a normal expectation of trade on any given period. And then you have your targets, kind of dictated on the outside bounds here. So what are we looking at when we step on the desk on the morning of November 18th? Absolutely, we see the alignment here. And then what's the trigger? You have a daily that's in direct alignment here too. So 89,855, and you're seeing here 89,361.5. So There's no reason that you have to catch the knife, right? There's nothing here that dictates that this market's going to turn around. Negative structure. There is not a break in structure yet. But how are you going to use the price map to kind of anticipate that? Well, you get this that holds, that break into the weekly or DP, and it holds. Who knows if it's going to hold, right? But where's the trigger? The daily. And the daily shows you that right over these levels here, right? So absolutely, breaks here, creates a buy DP reversal by a tick or two. That'd be okay. You might get churned a bit here, where you wrong here under the DP, but re-engage immediately, right? So the fact is you might churn 1 or 2 trades, but the moment you're back over here, you're back in a buy DP reversal. And that's your trigger to lean on the weekly. Where does it target? The directional. And then we saw a further alignment here on the UT1 and the UP, right? Why? Because that's where your weekly directional is, right? And so if you're really going to trap shorts and you're really going to change this trend, which is a downtrend currently, it would make a lot of sense that you just reverse the whole trade, logically speaking, on anybody that's in profit from nailing this sell directional breakout, right? And so what did we say? BTC trigger is the daily buy DP reversal. The weekly alignment is on the weekly DP. The daily buy DP reversal teed up the squeeze to the directional 92.54 or 92.541 on the daily. If the market's good, a base over that figure targets the weekly 96.932. Without a held trade, remember we're still in a downtrend, right? So on the weekly, we're still in a downtrend. We're going counter trend. At failure of this level, give the ball back to the bears, right? And so that is by all means, you may want this to be the absolute low. Where's the tell that it's not? If you're buying here and the market trades back under here, you should be out of some. Collect some profits, right? You're counter trending. Don't get greedy. You can always put it back on. But the fact of the matter is you have the R level above the market on both the weekly, the daily, and the market should just go if it's going to trap people. By no means is a trap giving people the opportunity to recover or a second opportunity, right? So I hope that helps with that question. And then we'll bring that back over here. But another question was, so it says, thank you for posting the trade plan. With the market in a bear trend and a negative bias, would you also consider a sell directional break with the DP as a 1 APMD target? This trade aligns with current market state and structure on the weekly chart. How would the daily price map support this trade plan? With the daily price map, will the daily price map help with refining the entry strategy? Yes, the answer is yes. So I think we went over that a bit today with how we kind of looked at the weekly and daily. But it really just depends on the playbook. And so different playbooks, we have tons of different market states, some that we haven't even covered on any of our sessions here. And we have tons of different R regimes. So each R regime has a different combination with the market state, and all of which are going to tell you something different, right? Or different themes, different kind of nuances to look out for or to kind of pay attention to. So specifically here it says, would you also consider a sell directional break with the DP as a 1 APMD? So let's use ETH today as an example, right? And obviously, yes, it played out inversely, but the playbook's also covering what to cover if it doesn't, right? And so in this market state, which is a bear trend with the R level at the CRX plus, station between the UT1 and the UP, you have a sell directional breakout can be used to add to any short position. However, what the playbook says is use proper size management and avoid over leveraging. The market should begin trending lower below the directional and stair step down. So I don't know. I know it's a bit tough in terms of how to see it on my shared screen, but we're all very familiar with bear trends. If the market's going to go to the DP, it needs to go, right? With the R level so high above the market needs to go. Otherwise, the market's at risk of making a corrective play. Typically, in most markets, unless you're trading the VIX, right, where the VIX is mathematically going to head lower, it's a market to buy, right? And so that's why the short side of the trade is always the most difficult. And so anytime you're on the short side of the trade, you need to always be aware of where that risk is, for one, but also where the traps are. What we are looking to operate in, and what we try to kind of uncover every single day through the price map and through the playbook, is optimal setups. Markets don't always trade optimally, right? But that doesn't mean you can't partake. It just means not to be sized up in it. If you are sized up in a market, it needs to be performing exactly to your trade plan every minute of that trade. Otherwise, there's no room for, well, if this happens, that happens. No, that's a bias. The fact of the matter is the market is not trading to expectation. You need to change to the expectation. And so the reason I'm saying that is when this market, well, actually, let's use the Bitcoin, because we actually never did a sell deep directional breakout here. We did here, but it immediately incorrected. So on the Bitcoin daily, we did, right? And so what do we need to see? Okay, we're in a directional sell directional breakout. Fine, the market kind of chops around here. It's holding negative structure, breaks, right? That's positive. That's to the expectation. The moment that it breaks under the CR minus and then retrades over the CR minus, that is not positive, right? That is not to the expectation. And where are you proven wrong? Even further, back over the directional. So if you get a break under the CR minus, negative variance, and break back over, one over the previous day's mid is a tell for you that potentially your thesis is wrong. Over the directional, your thesis is further wrong. Over the alert distance, it's absolutely wrong. You're now in a bi-directional breakout. So by no means am I saying not to look at it and not participate in a sell directional breakout. However, with the R level so high above the market, the risk reward to slam these lows lower becomes that extension back up and that corrective move higher. Sometimes you get a break right off the open and that selling pressure just wants to continue to break. Absolutely. But in those markets, that price is creating negative structure and never breaking negative structure. So I hope that helps. Let me take a look. I see some other. Okay, so I see some other questions. So don't. Can you hear me now? Should be good now. Yeah, Steven, can you hear me? I think I bumped the mic. Yeah, should be good. All right, so I'll answer that question again. So I don't know where I cut out, but Dome's asking if there's anything to kind of get started. Go over to the sign up page and go to the free sign up. So I would trader assessment education. I would absolutely get started there. Do it in order. So trader assessment, super cool, helps you understand who you are. And then as you kind of go through the academy, keep that in mind because self-awareness here helps a lot. So within the academy, then you can go through all of the kind of work that we've put together for you, and we're going to continue to roll some out actually, so that's cool, and I'm excited about all of that. But then you can also test your competence through quizzes, right, and your understanding. So make sure to go through all of those. I am going to close that so I don't give you all the answers, but yeah, go through there if you have not already. There's a ton of stuff in there. It will take you some time, but we feel it to be very valuable information. So cool. All right, we'll leave it for one last question. If not, we'll hop off and hope everybody kind of enjoys the week. Awesome. Yeah. Enjoy the week, guys. I will catch you most likely next week, I believe. Yeah. Next week we will be on regular time. So I will see you then.